that direction. So you can see the first zone. The first thing we do on after open on that day was we close above. Obviously, you guys know I'm not interested in any trades past the third swing. So I would not be taking this long because it is past my swings, and then also you guys know watch out for the first zone of the day. So I'm not interested in longs, and then as soon as we do that, we broke structure to the downside, and that is going to give us like our first zone of the day, which you guys know I always want to see what's going to happen with this first zone of the day. Is it going to be respected? Like, see, we broke structure down. If we would have came up and respected this zone, so that would have made this like our first swing down. If we would have respected this zone that made like a lower low, say going like out of here, then back down here, and made this a zone, then yes, I would maybe consider it a short. But I want to see what this first zone of the day does, and obviously you can tell that it does not do. It is not respected, so we're obviously bullish, and once we were trending up, and you can see we have like a nice retracement here, and that is going to give us like a zone right here. And so you can but obviously this zone's not respected, unfortunately. And but so once we make this retracement, we close back above, this low becomes our protected low, and that is because this low right here is responsible for this closure above this high. So this becomes our zone, and when that zone is retested at our 50%, you would want to take a long, but unfortunately that does become like a loss. So that would be not good. But once we close back below this low, that's where you would want this last up move would be our zone of interest. So you were taking that loss, but
Hold
that
up,
would
hold
have
up, hold
told
up.
you that.
Why is that
Oh,
your new zone of interest? I think that's where a lot of people are not understanding where what makes that a zone.
because when this low sent us to this high, when this low is disrespected and it's closed below, that makes your last retracement to the upside your zone of interest to take your short at 50% of this zone, and that would be like this. And you want to take profit where this low is, not at these lows. So that would have been a nice 33-point short compared to, say, I think this long would have been. So that's like if you do take a loss, you can't be afraid to just go ahead and flip positions like that. So that would have been an 18-point loss right here. But when we closed below, that told you we were wanting to go short. So then you would have went short for 33 points, and you would have had it all and some back. So just like that. So once you're going down, once we close down, we had a retracement, and when we go to close back below this low, that would make this zone our last zone because this is the retracement. So once this retracement would become our zone of interest, and we'd be looking to short at like 50%. But obviously, we do not get that, and we have a retracement here, and then we go down to our third swing. So after once we make this third low, this would become the zone of interest because this is the last retracement. See how we made this low? We come up, and then once we close back below this low, your new protected high is the highest point of that retracement. So this high is responsible for the closure below this low. So if you do not obey, like the three swing rule is just my own personal preference. That's my own rule. It's not something that you have to trade because there's times that you can make 10 plays in a row going the same direction, and there's times that the three swings can save you. So once we made this third low, I wouldn't be interested in this short, although it did play out. Because when we made this low, we retraced, and we made another low. So this last retracement becomes your zone, and you want to short at the 50% of this retracement. And then you want to take profit at this low, not at this low. Because you'll see there's times that sometimes we won't go make a new high or a new low, but a play will play out. Um, I think my following day has one. So once we take this short, so now you would have had your 36-point winner or whatever it was up here, 38, and then you could have had 17 points here with after like a 13-point loss or something like that. So you're still very green on the day. You just have to continue with it and stick with it. So as you can see, once we have our third swing down, we come down, we have a retracement. This would have paid the shorts, and then we close back below this low. That is going to make this retracement our new zone of interest. So it would be right here. So you'd be looking to short at 50%, and so if you do not follow the three swings rule, you're short at 50%. Your stop is the close below, and your take profit is right here. We close above, like right on this candle. You can barely see it, but we close above with that candle right there, and then you would want to take a long. But that's just like one of those things that you would have been up so much on the day already in these couple of plays that you've probably just been good for the day, because then it gets kind of weird because we go down, we go back up. It's just big, huge moves. So they'll go to one more day. So as you can see, we are trending down going into the morning. So you guys mainly would know that I'm really just looking for longs coming out of here. So you wouldn't want to start drawing any kind of zones until we break this high, which we do right there. So once we break this high, this downswing becomes our zone of interest. And obviously we come down, we have a retracement. We don't quite get to our 50%, so there really isn't much of a trade here. So but we don't mitigate much of this zone, so you can keep it on your chart if you wish. So once we come up and we have a retracement and we close back above this high right here, you're gonna want to, that would become your new zone of interest. And if you guys follow my videos, you guys know that I like to keep unmitigated zones on my chart for reasons like this. So see how we left this zone behind? We ultimately come back and test these zones. Like, see how this one wasn't mitigated very much? We come back, we test it to right to the 50%, and it plays out later. So there's times that you can trade them like that too. So if they're not retested, they will be retested eventually. So as this becomes like our zone, so that's our current zone right here. So this last downtrend is, once we close back above this high, this retracement right here becomes our zone.
Jeez, quiet. Quiet voices, buddy.
Oh. So this zone does not get retested, so that's one you want to keep on your charts, because they will be retested, whether it's like that same day or next day. I've seen some of them go like a week later, and all of a sudden you'll find this little 20-point zone just plays out. But continue on. Once we come up, we have a retracement. We do not test this zone, and then we close back above that high. That breaks my rule of my third swing. So I'm really not interested in longs anymore, because this would become our zone. And this becomes our zone because this is the last retracement down before we close. So this becomes your protected low, because this is low responsible for a closure above this high. So this zone ultimately goes unmitigated as well, because we have a retracement, then we go higher. So we want to keep this on our chart, and that's when this nice downswing will become our zone of interest. But since we are above that 3 swing rule, I would not want to take this long. And this is why, because it ultimately ended up failing. Because once we came up, we closed above, you would so-called long 50%, and then you would have got stopped out. And so once we closed back below this low, that would make this last uptrend our zone. So you would want to be like shorting right around our 50%. So you would take like a short. This one doesn't quite get 50%. So it's not always you get 50%. It may happen 2-3 times a day. So it's just the way it is. Or sometimes I talk in my videos, you could scale in at say 30 or 40%, then average more at like 50% and let it run, see what happens. But that's totally up to you. Just kind of manage your risk with what you're willing to lose. So we made this low. We had a retracement into this zone, and we ultimately, I guess, this would be your low. And once we close below this low, well, none, yeah, we close below this low. That is going to make this last upswing your zone of interest. And see how this. See, you notice where we bounced, where we're kind of we are bearish structure, but these plays are still, these unmitigated zones are still playing out. So like you could have came down, you would have got your close below, and then I mean, if you really wanted to, you could try it along these unmitigated zones, but they still give reactions even if we're in bearish structure. So we're coming down, we retrace. That is, and then we ultimately close back below this low. And this is where my 3 swings rule comes into play, is because like this. So once we close below here, this becomes your zone. This is the 3rd swing, so I wouldn't be interested in this play because it's past my 3rd swings. We ultimately do break to the upside, and so this would become like your zone of interest, but it does not play out. But unfortunately, that's just kind of how that is. And then there's just big moves the rest of the day, which there isn't really much to show there. Then I have this day, we broke structure up in the morning, right here, barely. We broke structure up in the morning. So that would make this last downswing like your zone of interest. So like you could long like the 50% area, and you would want to take profit at this high, not these highs. So that play would have worked out beautifully. So once we went back and we closed back above this high, that would make, we'll get rid of that, or we can leave it. That would make this last downswing our zone of interest right here. This last downswing right here. Once we close above, because this low right here is responsible for the closure above this high. So this becomes your protected low, and this downswing becomes your zone. So you're looking for 50% of that zone. You do not quite get it. And ultimately we come up to our 3rd high, but when that 3rd high is made, that becomes, this pullback becomes your zone. And this is why I don't like longing or getting in a trend after the 3rd swing. Same with how we hit the 3rd swing and then we shoot right back to the upside. That's just my rule. You don't have to play it because there's some days where you may have 10 swings right in a row. So I wouldn't be interested in this long for that reason. So once we broke to the downside, like this low was responsible for this high. Once we close back below this low, this last upswing would become your zone of interest. But ultimately, we do not test this zone. So it would be something that you keep on your charts for possible reaction later. So we'll come down, we have a retracement. Is then we ultimately go down and we close back below this low. So that would be your new zone of interest. We leave this one unmitigated as well, and we come down, we retrace. So that would make this zone. But after we made our 3rd low, I'm not interested in short, so I'd be looking for anything to the upside. So And then as you can see, we're going up, and we're just kind of like this. We come up, we have a retracement. So, well, I guess once we broke this structure right here, this would be our zone of interest. That ends up being untested. But then we have a nice retracement right here, and we close back above this high. That would make this our zone of interest. And as you guys can see, we come back, we retrace, we touch our zone, we don't quite get to 50. So these days really weren't great for the 50%, getting in our 50%, but I just wanted to take some random days and just show you guys. I didn't want to try to nitpick and find the absolute best days. I just went through and grabbed some random days, and that was what I took. So we came down, we hit our zone, we went back up, we closed above. So that is going to make this low our protected low, because this low is responsible for closing above this high. So this downtrend would become our zone of interest. And then you would want to get in like at your 50%. Wrong tool. So you'd want to get in and say like your 50%, and then you go right back to the high. So that's how that play would have worked out. That's just a few days that I quick brought up, just kind of quick drew out for today. They weren't really all the cleanest for getting the most entries, but not every day is. So I like to do it like that. So I don't want to like go in and pick the best absolute perfect days. Like this stuff works 100% of the time.
All right.
So
Well, hey, can we
like
can we
that,
go
so.
to the next day and we just break it down the entire day? Like
Well,
right.
I have this day.
Well, right here, yeah. So, oh, you have another
So
day to
this
go.
is where
Okay,
I
yeah.
talk about the 3 swing rule can hurt you, because see how we're coming down overnight, and then so right now, as you guys would know, normally I want to see us break structure back to the upside, because I don't want to get in a downtrend past the 3rd swing. So I'd be looking for a break of structure to the upside, like we got right here, because this is the last low that we had before we made this low. So last high. So this becomes your protected high. So once we close above it, this last down move would become your zone of interest. And we don't quite get the 50%. We just have this retracement, and then we close back above this high. So when we close above that high, this retracement right here is going to be your zone. This little retracement right here. All this is nothing. All this is absolutely nothing, because it's all below this high right here. So that's where you don't want to get caught like drawing this stuff out, because it's all just kind of chop inside this range. So the only high is actually high or low is important is this high and this low. The rest of this is just going to tell us if we're going to close back below this low or if we're going to close above this high. The rest of this is just noise. So once we close above this high right here, this last retracement becomes our zone, because this low is responsible for the closure above this high. So we would want to take our long from our 50%, and there you go. So you have that trade right there for 11 points. So then once you have this high, we close above it. So that is going to make, say, this zone your zone of interest. And because this is the low responsible for the closure above this high. So we can ultimately come back. We get our 50%. This is not a trade I'd be interested in, because it's past my three steps. But be something like that. But that trade works out as well. So right there would have been like 25 points right by 11 o'clock or 11:30 or something. But then same thing. We leave once we close above this high. That is going to make this retracement our zone of interest, but that retracement does not get tested. So you'd want to keep it on your chart for later. And then when you're coming up, you have a nice retracement right here. And then you close back above this high. Well, I guess I had that drawn wrong. So this would be it. That'd be kind of how you'd have this drawn. So disregard that 5. So this would become your zone, is this high to this low, or no, it'd be this high. So because you're coming up, you have your retracement, and then you go higher. So because this high is trying to think of the word. So we have this high, we retrace, but we don't close above this high until like way over here. So we made this high right here before we closed above this high. So this would be your high that's interested. That is like the important one. So we have this is our retracement. You'd be looking for like your 50%, stop, close, low, like whatever, something like that. So then you're coming up, you close above. So this, let's say like this low or something like this. Sorry, I kind of drew that wrong. So we have this low is responsible for a closure back above this high, and so your new zone would become like this. But ultimately, it does not get tested, and then we just continue on throughout the rest of the day, and that's about all I have for this back test session. 'Cause I don't have any more days.
Well, you have plenty of days. There's so many days. There's 365 days a year. Not just ones you have previously drawn out. Didn't you tell
Right.
me? So like, well, what was it? Last week when we had a couple like choppy sessions, and you texted me and you were like, it was clean to me. I just went by structure and it was clean. And
Yeah.
ICT traders were pretty confused because
Chopped
we
up.
know when we're in chop with ICT, like a lot of order blocks and FEGs just don't matter because we're just in a
Right.
range. But
I'm
I don't
trying
know.
to see.
Just go to the next day, and we can actually like look at the trades and see if they play out. But without just
You
having
want me to
them
go
like
back?
pre-drawn, like let's just go look at them like in like real time and not
Oh,
and
you just want me to go to like some random
go to a,
day
like
from.
act like you were getting ready for this stream, but you didn't draw
All
anything
right.
out. You know,
All right, I got
so
you.
let's just go pick a, random day and see what
All
and
right.
see what it did.
All right. So let me. All right. I'll just
Also,
pick a
I don't know
random
if you've been
day.
reading chat, but something I've been kind of looking at is like when you have the a couple people have mentioned the 30-second model, like the leopard model, off of third swings.
Ooh,
Maybe
yeah.
you get like a 30-second model up, like a leopard model up for the 10 and 12. So
Right.
it's something I've kind of been back testing, but I'm still in the process of it. But I don't have enough data to like come out with it and say like, oh, this has a good win rate. So
Right.
exactly, Marshall. So like it's kind of like that. Like this kind of works better in chop, and then but
Right.
on trend days it's not as clean. But ICT is more clean. So if you can like intertwine both into like some kind of strategy, it could be absolutely powerful.
Right. Like if you get in a zone, you can take like a 30-second inverse or a 1 minute inverse out of that zone as well.
Hmm.
Trying
Yeah,
to
less points great because it's it's a 10 take profit and a 12 stop loss. So
trying to
yeah.
think what day, or I guess.
Well, just open your FX replay back up
All right.
and just go to the very next day. I mean, fast forward through Asia and London, and we'll just go right to the next
Well,
day.
that was already. Yeah, I got you. I just have to open up. All right. So I'll
You're
just
not.
take.
You're also not sharing your screen.
I know.
Okay, just making sure you're not going to start in. Like, all right, I got this zone here,
Right.
and we see nothing.
All right. I will just pick a day. Make sure I'm just making sure I'm in the right time and all that. So that's a big. There's just a. I just picked a random thing from. Let me go back to. All right. So I just picked this random day. So normally what I like to do is I like to see. I like to go like between like anytime between like 6, 7, or 8 o'clock, and find a spot where I can clearly see like a break. Like we make a clear low right here. So I would just pick up right here. I'll say, all right, we made this low. So like all this chop is nothing unless we close below this low or above this high right here. So as you can see, we have open like right here. And this candle is open. Why is it? Oh, this is S&P 500. Jeez. This NASDAQ? NAS 100. You got all kinds of different stuff. No, I'm just going to make one. You use NAS 100 to back this. We will go from February.
Don't make a new one.
13th.
Oh, I was muted. I've literally been screaming. Don't make a new one.
But you used NAS like
I-
NAS like 100 or something.
The very first one that I just made is the one that I just made for like 1 minute order blocks. Just use that one. That one right there.
All
Yeah,
right,
it's
so
it's just such June 6th of 2022.
All right, so
So
yeah,
just-
you're actually using NASDAQ.
Yeah,
all right.
yeah, it's NQ.
Not
Yeah.
NAS.
Yeah.
Yeah.
Yeah, just make sure you get the time frame right. That's the
New
biggest
York.
thing. Yep.
All right, so I will pick a random day.
Well, just pick a random day. Don't like look at it first. I want to see
Right.
I want to see it like. Can we just start where the thing ends, and then we can just run the trade like real time and see if it works instead of like just looking like hey look it worked.
All right, so you want to back it up?
No. Just I don't know if you can back it up anymore. You have to like start where I started the actual like session date. So go to the beginning. Yeah. Yeah, there you go. And then you change, and then like change the play ahead time to like 4 hours, or you can just do it from here. It's 10:30 in the morning, so that's fine.
Right. So as you guys can see, like through the morning, we were coming down, and we're retracing.
Right there's a 50 right
making
there.
lower
Yeah.
lows. So see.
Right there's a 50.
See how we're making all these lows. And then right in the morning, you can see we bust up. And then we have a retracement. It's gonna be a big, huge day. Holy! So
it's probably NFP.
So that's how I kind of would look at the day. That's how I would start it. Is I like to find between like 6 or 7, find a nice clear trend, and just kind of draw it. So then I'm looking to see what happens at like 9:30. So as you can see at 9:30, we make like our first swing up. So, and then we have a retracement, but this last downswing right here, before we shoot up, like on open, becomes like a zone that we have not tested yet. So, because this downtrend is the last downtrend before we broke our structure to the upside. So this zone becomes like your zone of interest. But as you can see, we come up, we make a high, and we retrace. So this would become like a zone of interest because we closed above this high.
Look. Hang on.
And let the daddy pregnant.
All right, you're good. Go ahead.
So once we close back above this high, that's going to make this last lowest low. The lowest low is going to be responsible for the closure above this high. So this zone would be your zone of interest now, but you have to remember you have this down here. So so we continue on. We're looking for like a retracement back into this zone, see if we could get like a long. This is a big zone. So it'd be like, I think something like this. Yeah, something like that. So we're continuing. So see, as we're downtrending, we're still looking to see if we can get along in this zone. And but this is the high that if we break this high, so this would be like our second high right here. This would become like the second high. So we're looking for a long in this zone. We're looking for a long out of this zone or a closure back above this high.
You're just gonna get a left tap of it.
That's what it's looking like, ain't it?
Yep. Maybe.
Give me my freaking box.
Delete that.
Yeah, I got
There
it.
you go.
All right, so you can see we're in our zone. It's gonna be a day with like nothing to even trade. So this is in our zone. This is still our high. So right now, this is all nothing. I mean, you can. Some people do as well. I've seen it in chat. They'll start drawing these zones out, and you can see how they're working. But this is like it's just sometimes it can burn you, sometimes it can help you. So
that's more internal structure than external structure.
Right, exactly. So as you can see, we bounced right off our zone, and well, your take profit of the zone would be way down here, so not this high. So we're still looking for a break of this low, because this is our protected low. We need to close below this low or above this high to make a new zone. This is what a day you picked. It's already 3 o'clock. All right, so
yeah,
that's pretty much that day.
so
There
that's
wasn't much there.
So your entire zone is now from that low up to number 2 there.
Yeah. So once we closed above, as we made this, that's how I draw them out. So
Yeah.
see how we respected that zone. We didn't quite get our 50, but that was actually the whole day. So there really wasn't like anything to trade that day.
Yeah.
Unless you traded, you were able to like start redrawing your zones. You were you could have been like this. See how we make a lower low right here, and we come back and we retest this retracement.
You know why
we come down?
Yeah.
And then like that's how we broke structure up. See how even this right here respected this zone. This is an unmitigated zone.
Yep.
But see how once we broke like this high, this last downtrend would have became a zone.
Yeah, and we never closed back below it. So
we came back.
You would hit take profit.
It, went higher.
Yeah.
Came back, retested this zone, went higher. Came back. Like just see how that works. So how we went higher.
Yep.
We come back.
Never close below
this zone.
Yeah.
And we go higher, back to our original high. So this is how like bigger. So like actually, this is a perfect example for how this stuff kind of works. Is like this a lot of times could be like the 15-minute chart, but on the 1-minute chart, it looks like this. Although I know this isn't, but that's how sometimes the swings work.
Well, it's kind of like an hourly market maker buy model that's also consumed with multiple like 1-minute market maker buy models like inside of it.
Right.
Essentially, but you're just looking at the structure of it and not the FEGs. But what I see on that swing from that last protected low to number 2, me as leopard, 50%. I'm looking right at. I see 50% right there. I guarantee there's a 5-minute or a 15-minute FEG in there that held. We got our 50% retrace, and we got our movement there. So you see the 5-minute FEG sitting right there. Yeah, and the breaker. Yeah. What about the 15? I guarantee it's a big 15. Yep. Right off the 15.
Right off the tick.
Right off the OB, the OB, the breaker, everything. See,
it all just kind of comes around full circle.
It just depends how you want to look at the market. Yep.
That's why a lot of times, like once we get 3 swings down, like this is like your first low, this is your second low, this is your third low. Look right where we're at. We're really close to that 50%. It just all kind of works out of why I do that, why I have that rule. I can try to skip forward and go to the next day.
Yeah. Let's do the next day.
All right. So I'll go back to like 5 minutes. So as you guys can see, we're coming down. We have retracement. We're coming down. We don't until we close above this high. That's the only thing I'm looking for. So see how I'm looking at these equal highs. So I'm looking at these equal highs as my last tiny retracement. This is a time of day where like this retracement is like nothing in the New York section, but knowing it's pre-market, it's a lot smaller move. So that is, to me, I just kind of go by the feel of my pants of what is like a retracement. So as you can see, all this in here is nothing to me until we break this low right here, or we break this high. This is all junk to me. We finally break this high, so that is going to make this last downtrend my zone of interest. So you would want to take, then right on open, we come down. This would be like your play. If you want to take it, it's right on open, so it's risky. But you get your 50%. Your stop is a close below, because sometimes they want to take lows to go higher as well. Or you got your like 9 o'clock soup, or So, and plus, like a move like this is usually probably fake, being like it's 9:30. Of course, we're gonna shoot down, then go back the other way. It's not uncommon. So, as you guys see, so this is, we have a retracement. We come up, and when we come up, that is going to make this our last zone of interest right here. So this high and this low is responsible for us closing back above this high. So this would be swing number 1 for me. This would be swing number 2. This would be swing number 3. And then after that, I'm really just looking for shorts, because I don't want to hop in a trend. So, because a lot of times, we have 1, this is swing number 3, this would be swing number 4. But look at the timing. It is 10 o'clock, so who knows what happens.
Yeah. Give me a reversal.
Exactly. So we get our retracements.
What day is this?
We have
It's
a
a Wednesday?
here.
Okay.
We come up. We have another retracement down. And we close higher. I'll just draw this out quick. So we have a retracement. We come down. And once we close back above this high, guys, this would become our zone of interest right here. Right here, from this high to this low, because this low is responsible for us closing above this high. This low is what sent us higher. So I'm going to leave this on the chart because it is like an unmitigated area. This zone becomes unmitigated as well. And as you can see, we come up, we have our third high. I wouldn't be interested in any longs out of this zone anymore anyways. We have our retracement. We get back up. We close back above this high. And this would be our zone of interest. So if you do not take, for fun purposes, I wouldn't take this, but we're going to see what happens. So you would want to, if this wasn't the third, fourth swing, you would be looking for your 50% to go high, or maybe just go back to this high. So you would want to take a trade from like the 50% area, and you would want to close back. You want to close your position right back at this high at the zone, not up here. Because there's a lot of times we may go hit this high and then go lower as well. So let's see what happens here. Should we go minute by minute?
Yeah, go a minute. Yeah, because this could be like a 50% down to 50% up, and then then go back lower. So it's
because see how these zones are unmitigated.
This goes higher.
So it may be something that you get 50% here.
Yeah.
Like Leopard will be looking for the 50% of this zone. You would hit this
unmitigated
where 50%
lines up. Yeah.
Exactly. So see what happens here.
Yeah, the zones are essentially they're essentially
blocks.
Just
they're higher time frame
or order blocks. Yep. Or breakers. Yep. Exactly.
Yep. So right there we close below.
Yep. That's why you don't trade after
below. Exactly. Once we close below, this last upswing is going to be the zone of interest. But this is where it can get tough, because you can lose track of where this is going to go, because these can give you responses. We may be just coming down 50%, hit this zone, go higher. But we got to close below, so you would want to be taking a short from like here to here. And just like that, you hit
boom.
Profit. So now you are sitting neutral. You are completely neutral in your position. You're out. You want to see us close below this low or above this high. Close below. So once we close below, you're going to be looking for a retracement back into this last retracement. This is the high that sent us to this low below this low. So that is going to be your zone.
I have another question. We hit
Yep.
50% of that second swing zone up.
Yes, sometimes they will give you a reaction. Sometimes they won't. A lot of times I like to take like the bottom one, but if they're stacked like this, it's weird. But
Yeah.
we'll see if this one. So like, say you could have taken profit on that trade,
And then
and then you could have taken a long here.
On
Not
the
really
long.
recommended to fight the trend, but they do still give a reaction.
Yeah. Let's see.
Not
Boom.
So you could take that long out of the 50% of this unmitigated zone. So see how those work. So now you could kind of just get rid of that zone because so right there was a 22-point short right into a 25-point long. Right there, you got 50 points in 2 trades.
And
so now this reaction out of this zone sent you back into your bearish zone. So this is swing number 1. This is swing number 2. But this is where it can be a little sketchy. You might want to downsize because you know you're getting a bullish reaction off of their 50%.
Yep.
Or, you know what I mean? It's just something you might want to tread lightly in this short.
I feel
it
like
may work,
this is where a lot of
not.
newer people with the zones start to get confused. This is where I would suggest zoom out to the 5 and the 15 and see where we are using like ICT and be like, okay, are we on like a 15-minute 50% here that could possibly send us back up? Yeah, so it's what I would recommend here. Just going to the higher time frame and still trading with that as long as you haven't hit your three swings.
Right. So this would be swing number 1. This would be swing number 2.
Yep, because we also hit that bottom zone too. So
right, we did tap into that again. We I'm not sure if we took those.
I guarantee zone 1 right there is a 5-minute order block that was not retapped.
Right.
It might have been. It looks like it.
So continue on like with the model, you would want to take about the 50% of this last upswing. So that would be your short, would be like this. Your stop is the close above. And then you would want to try to take it down. But obviously you're already at 50 points of the day. It's probably good to just be like, all right. And then there's your third trade. So this is now you are neutral in your trade again. Now you're neutral. You have taken profit. You're 3-0 on the day for now 75 points. So see how this works is now you're kind of looking for it to go lower, but you want to take profit here because getting a push out of this 50% could send us higher, but you already took profit. So now you're sitting there and you want to see us close because and this is the highs that sent us down here. So we are neutral in our position. We want to see what the market is going to give us. We need to close below this low and make a new low.
Hey Taylor, real quick,
break this.
Can you delete the last 2 zones, the last 2 bottom zones? Just so
I can.
It'll just clean up the charts a little bit. Yeah.
Yep. All right. So so now you're sitting here and you're like, we need to make our third low, which already at this point I'm already not interested in it because once we come down here, this would be my third swing, and I'm not interested in shorting it anyway. But so now you're sitting in neutral because you've taken profit. You need to see a close above this protected high to make us bullish, or we need a close below this low to make us bearish again. So now we're just gonna play it out, see what happens. I'll go 5 minutes here. So see how sometimes like Leopard was just saying how a lot of people will be sitting here, oh my God, this chop's awful. This is awful. Look, we've been in the same range since 10 o'clock. Since 10 o'clock, we've been in the same range. We're 3-0 with 75 points. And everybody else is getting chopped up. We know our important highs and our important lows. So until we close above or below one, I don't care what happens. This keeps you out of the garbage. So now we close below. That is going to make So now once we close below this low, that is this whole retracement from this low all the way up to this high becomes your zone right here. But also keep in mind, now we have basically equal highs. Do you really want to short this zone? It's also our third swing. So I'm not interested in any kind of shorts. So as you guys can see how I draw my zones? I'm not drawing any of this crap because until we break an important low or an important high, I'm not making another line on the chart. So now we kind of had a retracement here. So I want to see if maybe we do this, and then this could be our break of structure back up. So now we close back below. So this would be your new zone because we had a retracement. So now this high is responsible for us closing back below this low. So now, you have unmitigated zone above, you have equal highs above. So this is not a zone. I really would not want to short this after a dump like that from, I don't even know. Where did this start? 800?
Why not?
12,800. Now you're down at 12. I mean, that's 200-point dump. So also, that this was our third swing down, third low. Now we have a fourth low. So that is against my rules to hop in this trend. So I want to see us close above. The only thing I'm interested in is us closing above this high. It's the only thing I'm interested in. I don't think we closed.
I don't think so. No, we didn't.
No, it did not.
It just goes to show
Like
how important those highs and lows are.
So
I will also say,
there's our close above.
There's your close. Yeah.
What were you gonna say?
Oh, I was gonna say, like, these same lows and highs also determine your for the ICT traders. These same highs and lows also determine your entries for 2022 models, because a lot of people always get like your break of structures wrong when they're looking for their 2022 model, like short or a long. They'll be like, oh, we closed above this wick, but that wick was not what sent us to a new high or a new low. So like whenever you see like a breakdown, so like on his, you see like when his last 1 and 2, that's your true break of structure down, and then you see we came back up, hit that higher FVG, that's your 2022 model short right there. So that's your true break of structure. So these zones just can, that's your market structure shift as well. So
we are at the end of the day, but I'm gonna say this is just for fun. This is going into Asia, so this would be your zone going into Asia.
What's wrong with Asia? We trade Asia here.
Sometimes they play. They actually play out.
All right, let's see. Oh my gosh, it's an all-night hold. Uh-oh. You about to get cooked.
Yep.
Yeah.
But so that's how you guys can tell how to navigate this stuff. So this day was just junk from 10 o'clock until noon. We finally got a break of structure, but that was able to keep you out of all this crap, all this junk, all this chop. And look, you've seen it perfectly clear as it could be for 22 points, 25 points, and another 25 points. So almost 75 points on the day. What everybody thought was chop.
Yeah.
And then, this is where, like I said, sometimes so some people do play the three swings and some people don't, because this is kind of a toss up. I would rather hit my 3 trades, know I got my 3 swings, and I'm done for the day. But so say you didn't play your 3 swings, you just take every trade there is on the chart. So once we came down, we made this low, and like I said, we had this retracement, and then we closed lower. This last retracement right here would be your zone. So you would take your 50%, stop at the close above, and see that zone would work. So you've been up 100 points, and then ultimately the fourth would have failed you. But that was actually a really good example. That I was a little nervous on that one because we were just gone, but that turned into it looked really bad, but it was super clear with zones. So with that, I will hand it over.
I'm either
Leopard.
gonna say I'm gonna shed if they want us to do another day, or if we want to end it here. We've already gone in hour long on a Sunday, so I know
Yeah,
people want to spend time with their families and stuff too. So we can either do another day, or if you guys want to hop off, we'll leave it up to you guys. Appreciate it, Jared. Yeah. Yeah, it's definitely recorded, Jared. I'll have it uploaded here as soon as that. But yeah, let's end it here. It's been an hour here on Sunday, and we can go fire up the grill and get some burgers on. So yeah, we can continue to do more. I wanted to do some 1 minute OB just back testing. Maybe later tonight if I'm not doing anything, I'll just hop in voice chat. But I don't want to keep you guys too long. So you grasp what you were missing, Crypto. Nice, yeah. Because I know Wyzrd's DMs have been popping lately with a bunch of questions and people drawing the wrong zones and stuff. So we wanted to do like another class here to kind of clarify that and have people drawing the right zones. Because if you're taking the wrong zones, then you're obviously taking the wrong trades and you're gonna wreck accounts.
Yeah.
And then so we just want to clarify things. So
Yep. So yeah, it just takes time to just